Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at MarketSite, we have Quincy Crosby. She's the chief global strategist at LPL Financial with her outlook on 2023 and the markets and economy finding its way back into balance. Quincy, it is great to have you with us. Welcome back to Trade Talks. And this is such a refreshing take considering all of the news that we've been hammered with daily. So tell us more about the theme of finding balance in 2023.
Finding balance is basically having the Fed get through its job, get through the process, get us back to price stability. Now, granted, the market is going to move before we actually get back. Probably if the Fed could get to even 3%, you'll see the market moving higher, the equity market moving higher. It is that, and then we also have another obstacle, which is earnings. How bad is that going to be? The pessimists have the margin decompression just terrible, and yet it could be a little bit. Just, we expect to see margins compressing, but how much? And then the other part is the recession. What kind of recession? Do we just stall? Maybe we just go into stall speed. Today we had consumer confidence up, and it was up markedly. It was up markedly. Now, granted, when you have oil prices down, gasoline prices down, there's this direct positive correlation with consumer expectations. And it was positive. We're still spending. The labor market is still quasi-resilient. And therefore, the Fed almost has the luxury, believe it or not, looking at it that way, to keep raising rates and then trying to get this economy demand to slow down. It's doing it a little bit. Rents, that's starting to come down. And one of the new, how should I say, products, I'm so used to saying products, but from the Fed is to see how quickly rents are coming down. They're going to be using a new metric to show them how quickly rents are coming down.
Yeah, well, it's so interesting because over the past nearly 15 years, the market's been conditioned with one direction, up and to the right. We had a little bit of a tantrum in December in 2018. The Fed reversed course right away. So it has to come back into balance, to your point. So the Fed's going to do what it needs to do to fulfill their mandate. Yeah. And it feels as if there's this disconnect with the market where the market wants one thing. Right. Meanwhile, the Fed's been pretty clear in articulating its strategy.
It has been, but I think what the market's view is, well, the Fed will never get to where they say they want to be. So, even the Fed funds futures market right now is saying we'll see rate cuts in 2023, toward the latter part of 2023. The Fed, that dot plot, was saying no, not until 2024. And what happened at the press conference that really got the market upset was that he didn't shrug it off. A reporter asked him, and he has in the past shrugged off the dot plot and said, well, that's a guess that they have, it's in the future. This time he actually stayed with that. But he doesn't know, the dot plot doesn't know, and the market doesn't know. The market is as data dependent as the Fed.
Yeah, that's a great point that you make. So what's it going to take for the stock market to appreciate? It feels like this equilibrium of macro and micro needs to come into balance because we know what's happening with macro, but to your point earlier, with earnings, have estimates rebased enough? Or are they going to be able to execute? The comps look so different from 2021 when everything was firing on all cylinders, and then what it looks like now. So it feels as if that equilibrium is really what's key to get this back on balance.
That's absolutely true. And the market it's like a GPS. It's always looking for that balance. It's looking for the correct path. And the market has to find the valuation that is compelling enough to have not just traders. This has been a trader's market. You can't call it anything else, but where investors come in. We know that retail investors are coming in every day. It's the professional investors, by the way, who are a little bit more scared to start coming in, but they're being forced to by the retail investors. So what we need to see is that guidance is positive. What the market's up today, Nike delivered. It was what we call, 3 revenue, bottom line, and guidance. And that's what the market needs. It needs more of that, upside surprises.
Yeah, no, it certainly does. Now, what are your thoughts on fixed income going in? I mean, that was such a beaten up asset class too.
But nobody ever thought of it for so many years. Who on earth would want 1%, or not even 1%? But now, if you're really, really credit or risk averse, you'll go into treasuries, short duration treasuries. If you can take on a little bit more risk, investment grade, short duration, but you'll get a decent return. Now, and you can do that in lieu of being in equities. You could wait it out to see how that equilibrium actually evolves.
Yeah, it's interesting. I have a number of strategists on saying 60-40 could show a comeback this year. If you,
what do they say? Wait long enough, everything comes back.
Well, that's true. That is true.
Yeah.
What are your thoughts around commodities? Because we haven't spoken about geopolitics and what's happening there. There's a lot of policy shifts that's happening in the world.
Well, you see gold. Gold is doing very, very well. It's surprising folks. We know that central banks are buying. People's Bank of China has been a major buyer. They finally came out and said, yes, we've been the buyer. They're buying a lot. They want to diversify away from the dollar. Smaller central banks are also buying because they're worried about the uncertainty in geopolitical, geo-military, and so they just want to have a reserve of something they can depend on. So we're seeing that, but also I'd have to say oil. You know, right now oil is down a bit. Today it's up a couple of notches, but as we get into the spring, we expect that China becomes what they have always been, the #1 oil importer in the world, that they finally get a handle on COVID, they start the reopening process, and they will be buying steel. So take a look at steel iron ore. It's doing very well. And also, how can we forget about copper? Right. Copper is, and what's funny about copper, Jill, is that it isn't just Dr. Copper. That's so old-fashioned. What Dr. Copper tells us about the economy, but it is also about green, the green transition. Copper is valued in the entire process of going green. The electric vehicles, there's a shortage of it, and we expect to see the shortage continue, and that puts an underpinning for copper.
All right, Quincy, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.